how do you evaluate an alternative investment?
Well, not to get too academic with it, but it really does come down to cash flows, just like any investment, just like a real estate investment. What's the source of those cash flows? How high a fidelity do you have on them? You know, um, for a piece of property, you have leases that lay out what your likely cash flows are for some time. For other alternatives, again, like private equity, that's not sure. And then I think the other big part of it, which is the much harder part of it, is trying to figure out what you're actually exposed to, what economic forces you're actually being exposed to by allocating capital there. I mean, I think to focus on the real estate side, especially through this last cycle, there's a lot of stories of sponsors who have purchased, let's say, multifamily assets and executed their business plan very well. They've grown rents and they've grown NOI, and that value add has been completely subsumed by a move in rates and an expansion of cap rates.
Yeah.
And it's really important when you're looking at alternatives, especially if they're private or illiquid, to have a really strong understanding of what bet you're actually making, and to know the game you're playing really well and know where those risk factors lie. And I think that's really the harder part of it than coming up with to doing the due diligence and checking the underwriting, is trying to figure out what you're actually getting exposure to and making sure that's something you want exposure to.